Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. It's already been a pretty exciting non-farm payroll Friday. I'm going to walk you through what I just did in the Sector Secrets room, the Sector Secrets Mastery, as far as trading the 830 hot zone, and walk you through how we were bullish before, and I'll show you exactly what we were looking at, and the zones that we take advantage of to be able to get long, and then what I'm expecting at the bell. And then, of course, we'll take your questions. All right. Well, when we're getting ready for an 830 hot zone, there's two things to keep in mind. One, this is not something for the inexperienced. This is not something for someone who's not really comfortable with their order entry platform. So I'd have to say you want to watch at least 3 to 6 of these kinds of hot zones before even engaging them with real money, right? It's really important to watch a few of these so you get a feel for what the markets are capable of. The second thing is before non-farm payroll, really before any high impact hot zone. What is a hot zone, by the way? This is a term that I coined in my third book about, I guess, 15 years ago now. And it was just my way of saying that there are scheduled high impact, high volatility events that create opportunities from time to time, but it's a hot zone, right? It's a high risk, high volatility time. But if we can measure the risk, if we can control the risk to a certain degree, then there's a lot of opportunity there. So non-farm payroll is clearly a hot zone. And hot zones have to be scheduled. We have to know they're coming. There has to be a specific time we know that that impact is going to hit the market. So therefore, geopolitical events are not hot zones. There's no timing on that, right? We have to have a specific timing. The second part of this is before the release, a lot of the major banks are going to have their forecasts on what they're expecting. This is important because it gives us insight into so there's the consensus, which is sort of the accepted number. And then there's forecasts, which if you think in earnings parlance, it's the whisper number for that event. And ultimately what we want to remember is these whisper numbers are the way in which a large group of traders are discounting the event. They're pre-positioned. This is what they're expecting. So the surprise isn't always consensus, that broad-based opinion to the actual release. It's that forecast or whisper number to that release, right? And most, if not all of those that I had seen were 220,000 and above. So the whisper numbers were already thinking, 200,000, 197 is a foregone conclusion. We're looking at 220, 240, etc. So the shock of the 260 print was diminished by the fact that a lot of brokers were already promoting much higher NFP numbers. Non-farm payroll at a 260 print would normally do what? It would send the markets lower because good data is bearish for the equity markets, has been for some time, and will continue to be until the target rate probability is met and the Federal Reserve finally stops hiking. In this environment, good data is, as we say, bad. The other thing to keep in mind is we had a little bit of an offset with and I'm going to take you on over to the economic calendar over at Forex Factory. Just refresh this. So 197, there's your 261 print. This right there, right? Now this came in a little bit lower, but it's pretty much in line. The unemployment, that's Canada. Sorry. Here we go. 3.7. That was a tick higher. By the way, the average hourly earnings was pretty much in line. That was a little bit better, but again, nothing huge. But that tick up in the unemployment rate, it definitely did, I think, offset that 261 print. And we could see that in price action. The initial reaction after the spike higher was significantly lower, and that's where we bought. All right, let's talk about where we got long. Those of you that have the hourly price movement ranges, you saw this clear as a bell. Before 8:30, I mean 8:29 and 30 seconds, 8:29 and 59 seconds, that hourly price movement range is still sitting with a healthy separation because we haven't seen the volatility of the non-farm payroll. This is what happened when we got the non-farm payroll data, HPMR sandwich, to warn us, hey, high volatility has happened, stay away now. But the read before the 8:30 data, this 8:30 candle wick hit that HPMR, there's our buy. Why were we looking for a buy? Not just because of the HPMR, but why were we looking for a buy? Well, some of you probably already know from the webinars that I did on Wednesday, which is the V-score was down near the lows since 8 a.m. We've been bouncing along this area since 7:25, 7:26 this morning, bouncing. Look where we were at 8:30. That's not sitting at the highs. That's sitting at the lows. We're at volume-based support on the V-score. Look at my slow stochastic, oversold. Look at our market trend. It was neutral, but actually still is. Market trend was yellow, neutral. That is not automatically a buy. It's favoring a buy. So we knew before 8:30, all the indicators are saying, Rog, if you're going to be long or short, focus on the long side. We hit the HPMR, and that's where we are. Now, what I told my members in the Sector Secrets Mastery when we set this up is we moved to a break even and scaled out once we hit 37.65. All right, so nice little move on that. And now we move to a break even or a trailing, and we're going to expect sort of an echo response at the bell, because remember at 8:30, futures traders can play, futures options traders can play, and Forex traders can play, but stock and options traders cannot. So that means that there's a second group of traders that will see what happened, and they'll want to engage the market likely in the same direction. That's the echo. That's what I'll call that 9:30 echo. And so I'm looking for a 37.80 target, which quite frankly, we are really right all over, and we might be able to see a higher high through yesterday's high. So we've taken back all of yesterday's sell-off in very likely an overreaction of, oh my gosh, Powell's more hawkish than we thought, sell-off, right? Because when everyone settled down, and I talked about this in the free video yesterday, so if you did not check out yesterday's free video at the Simpler Trading YouTube channel, light at the end of the bottom, part 2, what am I trying to tell you all in this video? It's really simple. Don't short into new lows. Not that the market can't continue to make new lows, but do not engage the market at those new lows. Sell stops are so often parked just below a new yearly low. Traders know this. Banks know this. Everyone knows this, except for the folks setting those sell stops below the lower low. What happens? Those trades get filled. Maybe we go a little bit lower, and then every one of those volume support lower lows has triggered some degree of a significant bounce. That's what this is all about. Light at the end of the bottom is please don't short into new lows, expecting those, doomsday spirals to whatever the downward target is. We could get there, but not without some violent short squeezes in the interim, which means if you're a bear, find the volume resistance, find the retracement, and short into what has become a fairly inevitable short squeeze at those new lows. It's not that you can't be short, just don't be short at the lows. Check out that video. This is a follow-up from the last time that I got long the equity markets back in mid-July. All right, so that is what we've got here. And let's jump into the questions, shall we? First up, Brian from the Free Trading Room says, does non-farm payroll invalidate the possibility of a breach retreat? It doesn't invalidate it, Brian. I just simply won't day trade the morning of a non-farm payroll. So there's 2 mornings a month that I just take off. One is the morning of options expiration. The other is the morning of non-farm payroll. So I will not trade this morning. I won't be day trading this morning. All right, first question from the YouTube channel. Do volume setups take precedence over clearing range setups? It seems they are opposite of each other. Not sure which takes priority. I will prioritize volume over price. I like when they both work together, but I will prioritize volume over price. Yeah, Prince, that is something I will do. All right, next up, what sectors, hey there, Bob, do I think could provide good trading opportunities after the elections week? I don't look at elections as anything other than volatility. So the best opportunities for me are going to be, where are we nearly oversold and reaching support in CHOP, and where are we in trends to the upside? So I don't play elections in that way. What I know that elections will do, they're a hot zone of sort, aren't they? We have a date at which we know folks are going to the polls. and we're gonna get results. We have a roundabout date, but I'll wait to see after the dust settles what opportunities happen in the wake of that reaction. And that's the way I look at elections, Bob. So I'll wait for that to hit the market. I'm not going to front run it. I'll wait for that to hit the market, and I'll see what kind of pullbacks or retracements we get. And then I'll respond to the response, right? I'll counterpunch, if you will. So thanks for the question. Can I explain the psychology of non-farm payroll today? Is the bullish move because of unemployment increasing? Debbie, I think we covered that. So thank you for the question. I know you sent that out before the show started, but hopefully if you have any other follow-up questions, I'll be happy to address it. But yeah, thanks for all the questions about the reaction to jobs. I wanted to kick it off with that because I saw some of those questions pop in before we went live. So great questions. Hopefully they're addressed. Let me know if not. All right. Matthew Phillips, good morning. Any thoughts on why VIX has been falling the past several weeks? Market conditions don't feel less risky from a month ago. Well, gang, I mean, remember the VIX, I know we like to call the VIX the risk gauge, right? And it is, but it's got its own calculation, right? And so I know that what we feel sometimes seems out of sync with the VIX, but remember the VIX doesn't really care what we feel. It only knows its ranges. And for as far as I'm concerned, take a look here. Look at all these Darvis levels. Look at all these Darvis levels up here, right up to the tippy top one that we established back on May 10. Look at the V-score highs, high. They correspond with these peaks. Look at the overbought stochastics. They also correspond with many of these peaks. One is volume, one is price. Darvis is price. The higher I get into the range, starting at about 33, right? You could even say starting at about 31, 35. And every one of these has been predefined by the automated Darvis support and resistance. What does Darvis do? It looks at previous peaks. It looks at those previous swings and then plots a line. There's just no better way to look at support and resistance with that mentality than using the Darvis, right? And so that means where were the peaks before? Where did the market respond before? And we just project that forward. And we just traveled right up into that area, right? That's it. And we've been selling off ever since. However, we're getting really close to the anchored VWAP for the year. And then just below that, we end up with another series of Darvis levels where at that point, we'll be reaching support. And that's the way that I've been measuring it, Matthew. I just look at where the levels are on the chart. And I'll ask myself, where are we in terms of that upper and lower edge? And I know how I feel is not necessarily what the Darvis, what the VIX is measuring. I'll look at the Darvis on the VIX, and that's been working really well, coupled with use a slow stochastic if you'd like, or use my V-score if you've got it. And they've been corresponding really, really well. All right, next up is, can we please take a look at China Tech K-Web? Sure. Where are we on the V-score and the bottoming process? No, not yet. Christian, no, because we're still in a downtrend. And I will not override the structure of the market with the volume. Same thing with BABA. Yeah, I cannot yet. Are we near lows? No. That's why I was warning traders about Amazon. Folks were asking me in Charts and Coffee, Rog, is it time to buy Amazon? And I believe that was maybe last week. Folks were asking me that. I said, please don't, because we continue to persist in a downtrend. So until we get to a -3 standard deviation, I'm not going to really look for that low in Amazon quite yet. And that's not going to be until, I don't have the V-score bands up on this chart, but yeah, that's not going to be for a little bit. And so as long as we're in a downtrend, I can't look for a bottoming process. I just can't. We can start looking for where support might be building and eventually lead us into a neutral market, but not yet. That's the process. So we can watch, Christian, we're not at those volume levels yet, probably pretty close at the -2, but I will not buy in a downtrend, right? Now, we could ask ourselves, are we in a downtrend on the weekly? And unfortunately, we are, right? And I'll do the same thing when I'm rebuilding or building a portfolio. Are we in a trend on the weekly? And if we're in a downtrend, no buys. Yeah, no buys at all. All right, CJ from the Free Trading Room asked, was the trade An ES option? No, CJ, it's the ES mini contract. The options are a little too difficult to execute with that kind of speed. It's far easier to use a micro futures or mini futures. So not an option, no. All right, next up, Francisco asks, in yesterday night's free video, I noticed that you have the standard deviations of the V-score on my daily chart. Is that also available for Trading View? Yes, Francisco, if you're taking the class or you have the bundle already, which used to be called the VWAP Max bundle, now it's just simply called the Volume Max bundle. And yes, we have all the indicators that I now present to you all, whether they're free or whether they're premium, are available on Trading View and Think or Swim. Yes. All right. And yes, gang, the class is tomorrow. The class is tomorrow. The slide deck is really good. Lots of chart examples. I'm going to walk you through that 1, 2, 3 step setup and that process, repeating on the weekly chart, the daily chart, the intraday. And the reason it works on all those time frames is because we're starting with volume, we're going to trend structure, and we're finishing things off with price. Most traders just start with price and end with price and then get blindsided by the underlying structure being maybe contrary to their position, or volume indicating that we're really not at support or resistance. So we're going to put that whole process together on Saturday. Really looking forward to that. You can check that replay out at simplertrading.com/money-replay. Or if you want to check out what's in the class, we have a lot of bonuses. It's simplertrading.com/volume. Really looking forward to this. Probably one of my most straightforward classes ever, where we are focusing on that one setup that's going to help us turn the corner. And that's what I've been doing all year long, right? We've been doing it day trading wise today with the non-farm. That was exactly the setup. That's exactly what it was, right? Okay. Let's see. 007 asks, Raghee, if no trade NFP or options expiration, the morning of. So I'll trade. I just finished trading non-farm. 007, I just finished trading non-farm. There's no morning event options expiration, so I just simply don't day trade the morning, which for me, the AM session is 9:20 to 10:35. So I simply won't trade that window. Will I actually trade CPI and PCE? I'll trade those events oftentimes, but those mornings are fine. Those mornings are fine. And what's the difference? 007, what I do and what I think my job is to be as open about when I win as when I have lower win rates. And for me personally, if I look back on 6 to 12 events like options expiration, day trading, or end of quarter, which is absolutely kryptonite to me, which insinuates I'm Superman the rest of the time. Here's a mind blow. Here's a mind blower. Superman was really who he was. Clark Kent was his disguise, right? So it always cracks me up when it's like, he wasn't Clark Kent, he was Superman. Clark Kent was his disguise. But even Clark and Superman have to know which events are going to get them into trouble. For me, that's end of quarter. For me, that's options expiration. And for me, that's non-farm. That means no 9:30 to 10:35 day trading. That's all. And so that means it takes only 2 Fridays away from me a month, which is probably a pretty good break, the way that I look at it. So why not So my win rate is fine on those mornings. 007, I go back and I study where I can keep at least a 60% win rate, and CPI mornings, PCE mornings, GDP mornings, they don't seem to upset the apple cart. Non-farm does, end of quarter does, options expiration does. So when my win rate drops from an acceptable level, I shut it down. Why would I lead you all into a morning where I can't even flip a coin and have a better probability for a winner? So that's why I shut it down. I shut it down for myself, and I'm certainly not going to sling trades on mornings that I don't have that edge. Yeah, so I hope that makes sense. Great question. And everyone here should be able to go back to their chart, their trade study platform, TradesViz, TraderSync, TradeMetria. I've been playing around with also Wingman Tracker for many, many years. Plug your data in there. Do not rely on your P&L, your Netlick, and your platform to tell you how you're doing as a trader. It can't tell you, hey, Rog, you trade really well with entries between 9:30 and 10:35. Hey, Rog, avoid the middle of the day. Hey, Rog, avoid the end of the day. Avoid certain days. Another day that's not a great one for me, even though we were able to pull out a few winners yesterday, is post FOMC. FOMC we traded the morning of just fine. I actually even traded FOMC with the mastery folks and the options folks on Wednesday. The day after is a so-so day, enough to merit trying, but it's falling a little bit on that win rate for me. So this weekend after the class, I'll definitely be going back to the drawing board and saying, you know what? Do I need to maybe take the day after FOMC statements and decisions off the radar, off the day trading radar, and say, look, that's another day that my win rate doesn't justify my putting capital at risk. And that's the way I'll study it, 007. Thanks for the question. And gang, just like that, we are out of time. As always, I appreciate the questions, and I will see you all I'll see my mastery folks and the futures folks for the Ask Me Anything session. Remember the class, simplertrading.com/volume, the tech session, which really should be called How Do I Make My Charts Look Like Raghee's session, is at 5 o'clock Eastern today in preparation for tomorrow's class. All right, gang. Super stoked to have had a good morning in non-farm with my mastery folks. Hope this breakdown it could become a template for you all to trade 830 economic events. And also think about which days your trading does not justify your putting risk in the market. Really important decision, gang. Do not trade days. What are those do not trade days? I've got them, and I've been doing this for 33 years, right? I think everyone needs to accept there are do not trade days. Thank you, as always, for being a part of the Caffeinate and Dominate crew. I will see you all later. I'll see you all tomorrow, hopefully. And until then, be good to each other, gang.